Holy smokers, folks, you thought it was over. I thought it was over. We all thought it was over. It ain't over. Stock market madness rolls on, folks. A lot to go through in today's video. I was shocked when I saw the amount of important companies reporting earnings this week. We're going to speak about that, okay? Here's a rundown of today's video. First thing is, I'm going to take you guys through some very interesting charts and data points that I think can be very helpful to you guys to kind of understand where this market's at right now and where we're headed here, okay? Second thing we'll get into is earnings this week, which is crazy. Like, I was shocked to see as many important companies still have to report that are reporting this week. So we'll get into that. We'll talk about my expectations for these companies. Do I think they're going to miss? Do I think they're going to beat? Do I think they're going to, perform much better than people anticipate? Things like that, okay? And the third thing we'll get into in this video is we're going to talk about two stocks I'm researching heavy at the moment. That these stocks are not stocks I'm buying yet, but they are potential buys. And I'm in that research phase right now. So I'll share what two stocks those are in this video as well. So action-packed video, 3 big things to go through in this video. Appreciate y'all joining me. Thank you for being subscribed here to the YouTube channel. And also congrats to everybody that got that Black Friday deal. It was a one-day sale only. $62 for the $125 usual tier there. I've gotten so many messages from so many of you guys that are really enjoying the Become Master Stock Market course. Learn as much as possible in regards to that. And now, it's just back to the $19 tier and the $125 tier overall. And do keep in mind, we have a drawing. We do a drawing every single month for everybody that's in the Patreon. We do a drawing every single month for basically free memberships, free 6-month memberships into the private stock group. And so that's coming up this week, actually. So 2 names will be drawn, and we'll let you guys know who those people are publicly, as we always do. And then we'll do one the next month, the next month, and next month, okay? Alrighty, guys. So where I want to start today's video at here is looking at a 1-year performance of the Magnificent Seven, okay? Apple stock has performed the least good of them, but that's still tremendous, 28%. Now, keep in mind, if you make 28% a year on your stocks, you are going to be filthy rich at the end of 10 or 15 years. I mean, absolutely filthy rich. That's tremendous performance. 28% for Apple, about a little under 29% for Tesla over the past year. Google McDougal, 41% in the past year. Microsoft, 52%. Amazon, 57% in the past year. And then NVIDIA and Meta have just taken it to whole other levels. NVIDIA's up 193% in the past 1 year, and Meta stock is up 203 flipping flapjack and percent in the past 1 year. Now, if you want to know why has Meta even outperformed NVIDIA in the past year, even though NVIDIA's had the most hype and excitement around it and the most talked about stock, here's why, okay? This is why. Valuation, 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 okay? Meta's my biggest position in the public count. We're now up $392,000 on the stock, and we're going to be up a whole lot more in the future. When it comes to Meta, it was strictly valuation. The valuation had gotten to such silly levels last year. Plus, the sentiment reached all-time lows in regards to stock. I'd never seen it like that. I mean, sentiment was so bad on Wall Street and from the retail community all simultaneously around this time last year. It was ridiculous. I mean, I remember talking about buying Meta, and people were saying, oh, that's going to be your next TTCF. Oh, it's going to be $20 a share. Oh, it's going to zero. Like, all this ridiculous stuff. I'm like, this is freaking Meta we're talking about. Like, people are just throwing out crazy stuff. That was on the retail side. But on the Wall Street side, people were just as ridiculous. Wall Streeters were selling the stock under $100 a share. The valuation, the sentiment setup was phenomenal in regards to Meta. I looked out there and I said, are more people or less people going to be using FB, IG, WhatsApp next year than this year? More people. Are they going to be able to command bigger ad rates or less ad rates? Bigger ad rates, okay? Reels continue to take off. Like, everything lined up perfect. This was just, and it's outperformed every other stock. You look at something like NVIDIA, right? NVIDIA's performed almost as good as Meta over the past 1 year, but with NVIDIA, you had to predict that we're going to go through this insane AI super cycle this year. It was a much harder prediction to make. Most people a year ago were not predicting like this was going to be some crazy AI year, whereas like everybody and their grandma wants to buy NVIDIA's, H100 chips. No one was predicting that. So that was a very tough prediction to get those sorts of gains. Meta was just easy, man. It was a free throw. It was a free throw, and you're Steph Curry at the line. That's how I felt when I was buying Meta stock last year. And it has outperformed significantly. And what that does for my returns over the years is going to be dramatically different than if I was sticking that same money in Apple last year, or in Tesla last year, or Google last year, or Microsoft, or any of those stocks for that matter. It's significant when you get that sort of outperformance over the market and over other stocks in general. I mean, the S&P 500 in the past 1 year is not up 20%. I don't think. If it is up 20%, it's like barely up 20%. S&P 500. And Meta is about 10x the S&P 500 over the past 12 months. What that does to your portfolio, especially when it's your biggest position, it changes everything forever, folks. Okay, a lot of people don't understand about the stock picking game, the math that goes around behind it. And when you have such stocks that perform so significantly, the upside changes everything forever for your life. Let's just put it like that, okay? No, I want to take you guys through some things from the investor report. We put out this investor report for everybody in the private stock group every single week. And I just want to show you a few slides I think are very important for everybody to see right now, okay? And here's a couple of these slides, okay? And the first one is right here, AII investor sentiment. So this is a sentiment survey they've been doing since the 1980s, and this is how investors are feeling in regards to the market. Are they bullish, bearish, or neutral in the stock market for the next 6 months? Not for the next 6 days, 6 weeks, for the next 6 years, for the next 6 months, okay? And this week we came in at a new, very bullish number of 45.3% of investors are bullish on the market for the next 6 months. Now the bullish high was right around July 19, 2023, which was, coming off that insane first 6 months of the year. So people were super bulled up, right? And about a year ago, around this time, or a little less than a year ago, we were very bearish in the market, right? As an investor community, 52.3% of investors were bearish on the market if we go back to around December, mid-December 2022. No, historical average 37.5%, bearish historical average 37%. So we're less bearish than we usually are. We're more bullish than we usually are. Okay, neutrals are roughly in line. But I mean, what a divergence just be 3 weeks ago. 24% of investors were bullish on the market the next 6 months. So think about that. Less than a quarter of investors were bullish on the market the next 6 months. Less than a quarter. That's extremely bearish, okay? Over half of investors. So if you polled 1 out of every 2 investors and asked them, are they bearish on the market the next 6 months? And if you're bearish, you're expecting the market to go down the next 6 months. Over 1 out of every 2 of those individuals would say, I'm bearish on the market. It's going down the next 6 months. And that was just 3 weeks ago. What a change. And now less than 1 out of 4 are bearish on the stock market in the next 6 months. What a change, folks. That's how fast things can switch in the market. Now, keep in mind, everybody's getting really bullish, right? Going into the year end. That could easily flip in the first quarter. You never know. And maybe all of a sudden investors get really bearish. They start selling off stocks. Market goes down. A lot of people take profits. And all of a sudden there's, more tremendous new buying opportunities in some of the bigger tech stocks or something like that. That can always happen. It's not guaranteed to happen, I can tell you that. But it is a potential. Things can turn from very bearish to very bullish very quickly. And vice versa. It's insane, okay? Next thing I want to show you is the CNN Fear and Greed Index. CNN Money does this Fear and Greed Index, and they've been doing this for many, many years. So this week we came in about 68 on the Fear and Greed Index. This is just Wall Street playing catch up, right? A lot of Wall Street chasing the market. This is what I told you guys. I called this out to you guys about 2 or 3 months ago. I was saying, into the end of the year, around November, December, Wall Street's going to have to play a game of catch up. They're going to have to try to catch up to the indexes. And the way they're going to do that is they're going to pile into likely a lot of the tech stocks and things like that, whatever can try to get them outperformance and get them some alpha into year end, because most of them have underperformed because a lot of them went very underweight into this year. And then we had that huge rally and it's just caught so many people flat footed. And so a lot of people are stuck in this situation. A lot of these Wall Streeters are like, damn, man, if you're significantly underperforming indexes, you got to try to get back in line. So how you get back in line is you try to play some of the, let's just call it the higher growth sort of areas, right? And so this is just Wall Street playing catch up here, right? Now, I think this is very important. This is not something that's looked at very often in the market, but I think this is something that is potentially very bullish for us for 2024. This is extremely important. This is Small Business Optimism Index. So a Small Business Optimism Index has been horrible for like 2 years. Horrible. Small businesses have not been feeling good for like 2 years. 22 months, 22 straight months, we have been below the 50-year average for small business index as far as optimism goes. That's bad, right? Now, if you look at this from a short-term perspective, you say that it's bearish, right? Small businesses are not optimistic. Well, it's been like that for 22 months now, right? There's a high potential, I think, in 2024 that small businesses and the consumer in general feel better. Inflation is not going to be an issue for 2024, and that's different than the past 2 years, because the past 2 years, inflation's been the biggest problem, and that has killed consumer confidence, that has killed small business confidence. And so I think there's a high probability in 2024 that small business optimism will get in a much better place and maybe even get above historical standards. And I think consumer confidence, the Michigan Consumer Confidence Index, that they've been doing that all the way back to the 1950s. I think there's a high probability that baby comes back as well in 2024. And so overall confidence comes back. Now, does it mean we're going to go to all-time highs or something like that? Absolutely not. But you got to keep in mind, these things have been in the dumpers for like 2 years now, okay? So if they could just increase, a decent amount, we don't even have to get to some sort of high numbers. Consumer confidence has been around a 60. If you're over 100, that's really good. If you're over 80, that's like, I think we can get back to 80 maybe in 2024. That would just be, But when you go from horrible, the worst, to that's a huge improvement there, okay? So I think that's something that's very important there, everybody pay attention to. Now, real estate. Mortgage rates right now trading about, or I shouldn't say trading, that's too much stock market talk, are averaging around 7.3% right now. Keep in mind, a year ago, we were about 6.5%, so I still don't expect real estate to bottom yet in terms of amount of homes sold, inventory, anything like that. I think we're likely still looking at probably springtime to maybe next summer to try to get this real estate market moving. I think we're still in a stalemate. I think we're going to be in a stalemate all winter. I think it's going to be a cold winter for the real estate industry. And I think the spring could be potentially tough as well, especially if rates peak up again at some point in Q1. Let's say fear starts in the market again. Let's say stocks start tanking. I don't know, whatever happens. Well, shoot, that would make it for a very bad spring as well in the real estate industry. Now, this is very important, okay? What I'm showing you here is the S&P 500 top 10 stocks, year-to-date performances, okay? And I thought the reason this is so important to show you guys these 10 stocks is what you got to understand is there's so many opportunities in so many different areas of the market. Many times as investors, we can just get, let's call it very one-tracked mind into thinking like there's only like this one opportunity in the market and there's no other opportunities. Dude, there's opportunities all over this market. They're in different industries, they're in different spaces, they're different companies doing different things, but there's opportunities everywhere, okay? Check this out. NVIDIA, Meta, Accenture, Royal Caribbean, Pulte, Tesla, AMD, Palo Alto Networks, Adobe, Carnival. What do those companies have in mind? Well, most of them don't have much or what should I say? What do those companies have in similarities? A lot of them don't have very much in similarities, okay? Many different industries, many different sectors, but they all have performed tremendous. The worst stock on this list here is up roughly 80% this year. And the best stock this year is up 233%. We got a semiconductor company, a social media company, professional services company, travel company, a home builder. Home builders have been benefiting obviously from very low inventory and people buying new homes. Auto, cybersecurity, digital marketing and creative software, and travel, okay? The gains have come from many different places. Keep in mind, lots of opportunities in the market, all the flip and flapjack in time, folks. Got to find those opportunities, all right? Next up here. So earnings this week, big important companies reporting this week. We got CrowdStrike and Workday, Splunk, all reporting very important stocks. And then I think the most important stock is Intuit, which remember we talked about small business earlier? Well, Intuit benefits massively from small and mid-sized businesses. Like that's their sweet spot when it comes to Intuit. Obviously TurboTax, QuickBooks, all those sorts of products are phenomenal, right? Intuit's been one of the best stocks in the entire stock market over time. Check this out. This is fascinating. This is what a truly great company does, and Intuit's been a truly great company. 11 out of the past 15 years, this is crazy, 11 out of the past 15 years, the stock has given you over a 20% gain in that year. Over 20% gain in that year. 11 of the past 15 years. Only one of the past 15 years, only 1 year since 2009, has the stock been down. 1 year, folks. How insane is that? That's mind-blowing. Absolutely simply mind-blowing. That's what great companies do. That's what great stocks do. What an amazing stock to hold, to know that, only one time in the past 15 years you have lost money, in that given year. In 14 of those 15 years, you made money. You literally got a positive return that year. In 11 of those 15 years, you got a positive 20% plus return. Now, to be fair, do I think Intuit is going to have a very similar performance over the next 15 years that it had over the last 15 years? I will say I'm not as confident in that. I still think it can be a tremendous stock over the next 10, 15 years, but I'm not as confident, okay? The company's gone through a lot of their growth now at this point in time, and also they did lose Big Dog, who's one of the most influential people to work for that company over the past 15 years, Alex Chris. He's over at my company now, PayPal. Thank you, Alex Chris, for coming over, by the way. That's a huge loss for them overall. That's a huge, huge loss. He was one of the most influential people, without a doubt, in terms of getting that performance over the past 15 years. I can tell you a lot of that performance came in part from this gentleman right here. He was a huge, if not as big of a component of that success as anybody was. And so something to just kind of little food for thought in regards to that. Wednesday's crazy. Foot Locker and Dollar Tree are reporting. We'll talk about those in just a moment. Snowflake, Salesforce are reporting. Okay, we'll talk about Snowflake in just a moment here. Salesforce, by the way, phenomenal company. Always puts up their numbers. They got Benioff, the hustler, freaking hustlers. Oh my gosh, that guy's just amazing, Benioff. Okay. No, Dollar Tree and Foot Locker, horrible stocks the past 1 year, right? Dollar Tree's down over 22% in the past 1 year. Foot Locker's down 40%. And then we looked at how tremendous so many other stocks have been in this market the past, year. And yet you got stocks like this that have just been doing horrible, right? When it comes to Foot Locker, Mary Dillon, this has been her year to restructure the company, right? 2023. This has been her year to work her magic, get the company in a great position for 2024 and into future years, right? And she has a great pedigree. Obviously, she was a CEO of Ulta. Ulta did tremendous during the years she led that company overall. She used to be the chief marketing officer and executive vice president of McDonald's. So, there's one of two ways this can go. This can go phenomenal, and she's going to turn the ship around, and 2024 is going to be a booming, and 2025 is going to be booming years for Foot Locker. The other way it could go is like a Roz Brewer situation, where Roz Brewer was a very hyped CEO coming over at WBA, right? She was a former COO of Starbucks, chief operating officer. She's a former CEO of Sam's Club division, which is obviously owned by Walmart. And yet, she just couldn't get the job done at WBA. Now, they can go one of two ways, right? It can go really good, and Mary Dillon can work magic here, or it can go really bad like it did for Roz Brewer. Now, Roz Brewer's situation, maybe that was an unsalvageable situation, or maybe it was, the chairman of the board of directors. There's potentially was some drama behind the scenes on moves, him trying to dictate what he wanted versus what Roz Brewer wanted. We'll never know what truly was going on behind closed doors, but it was pretty shocking to see Roz Brewer, such a accomplished person, in one of the, I think one of the most desirable potential CEOs in the world at that time. To see her kind of ultimately fail in regards to WBA was pretty darn shocking, okay? So we'll see if Mary Dillon does the same thing with Foot Locker that Roz Brewer did, and it's just complete disappointment, or we'll see if she pulls it off. But, you can't be too confident in regards to this, right? So I have faith in Foot Locker. I think they're going to do it, but at the same time, I'm very understanding that this could be a Roz Brewer situation, and maybe it doesn't work out, okay? Now, in regards to Foot Locker, here's a couple things that are going, that it has going for it in terms of stock. The expectations are on the floor. On the floor. Now, keep in mind, there's a lot of restructuring going on still in the business over this next quarter or two, so that will negatively impact all EPS numbers and things like that, as well as revenue growth, right? But, the expectations are really low. That's all I'll say. The expectations are really low, and so far, based upon Black Friday numbers we're seeing, and not just specific out of Foot Locker, but just the numbers in general, it looks like Black Friday was really strong. It looks like it could be a stronger holiday season than anybody's anticipating, just to be honest. And that was funny. An Amazon Prime truck literally just left, and now a big FedEx truck still going up the hill right now. That's interesting. In terms of next year as well, very low expectations as far as the EPS. Now, revenue, they're expecting kind of flatline revenues next year. As far as analyst community, 20 analysts have numbers. expecting about 1%. Earnings per share here. Earnings per share, 199. Keep in mind, Foot Locker's usually been a business that could do, 250 to kind of 350 range. So 199 is still very low for next year. So maybe there is potential upside there. If Mary Dillon can start beating some of those numbers next year, we're going to be flying, because then people are going to become convinced that Mary Dillon's got it and she's turning the ship around and she's got it, pointing in the right direction and things like that. Okay. So we'll see kind of what happens there, but I do like the setup as far as very low expectations. Now, Snowflake. So Snowflake's reporting this week. It's interesting because I was looking at Snowflake revenue estimates, and I was like, dang, man, 36 analysts, 34 analysts, the numbers seem kind of low. Snowflake expect to have 28% revenue growth in this quarter they're about to report this week. And then next quarter, they expect to have about 25, 26%. I thought those numbers are kind of low. You know what, something's fascinating? And this has to do with Palantir a little bit. Is Snowflake, do you guys remember, it wasn't that long ago that everybody used to talk a lot of trash about Snowflake growing so fast. Look at how slow Palantir grows compared to Snowflake's growth rates. I mean, this was just a year ago, 2 years ago. People used to talk about this all the time. And it's fascinating to me because now Palantir's growth rates are starting to get pretty damn close. Look at, for instance, obviously they kind of report a little bit differently because this is October quarter versus the December quarter. So let's just call it 18% growth expected for Palantir, and we can call it midpoint at like 27%. It's fascinating to see how much closer these companies have gotten. And by the way, in regards to Palantir, I think there's a high probability those estimates might be a little bit too low in regards to what analysts have there overall. And keep in mind, the analyst community around Palantir is much smaller, only 12 analysts. Cover numbers for this current quarter they're in, and nine analysts for next quarter versus Snowflake's 30 plus and 30 plus. Okay, but I do think it's fascinating that these growth rates are starting to get somewhat closer. Imagine if Palantir's revenue growth rate ever surpasses Snowflake. Like, what a day that would be. I'm not predicting that, but damn, that would be a heck of a day. Okay, no, Thursday's a huge day. Thursday you got Kroger reporting. Why does that matter so much? It's the biggest grocery store giant in the United States of America. What they have to say about inflation, food inflation or not food inflation, is going to matter actually in the market. There's going to be a lot of Wall Streeters that don't care anything about Kroger stock, but will be listening to what Kroger management team has to say about inflation, because that's going to give you some telltale signs about what are we talking about inflation in 2024. Now, you guys know my opinion. Inflation is not an issue for 2024 at all. In some of the grocery categories, you could actually see deflation, and that's what we actually heard from Walmart as well, right? So a lot of people be paying attention to that. Build-A-Bear, I think, is actually important to pay attention to. No one pays attention to Build-A-Bear. But I think a reason to pay attention to Build-A-Bear is they've already gotten to see Black Friday. And they'll already have gotten to see Cyber Monday. So a company like that will give you a little bit of good intel and insight on how the holiday shopping season is actually going so far. I think that one's actually important to pay attention to. I'll be looking at the conference call transcripts of Build-A-Bear and seeing like what the management team has to say, because I think that one matters, folks. It lets you kind of know, like, are we looking good this holiday season? Are we not looking good? What's going on here? Okay. Ulta Beauty reporting after the close on Thursday. Obviously, very important retailer in the makeup and cosmetics industry there. Now, in regards to this could move e.l.f. stock. If Ulta, people like the Ulta numbers and it's seen as very good numbers, that could move e.l.f. up. The next day, if the numbers are really bad for any reason, that could move e.l.f. down. I think Ulta will have some pretty exciting things to say also about Black Friday and Cyber Monday as well, since they'll have seen those days as well, and maybe that'll help them guide a little bit for the next quarter as well. And so do keep in mind that could move e.l.f. stock this week significantly. Don't be surprised if e.l.f. moves 5 to 10 percentage points this week. 5 to 10 percentage points, up or down, really depends on how Ulta numbers end up shaking out. But yeah, don't be surprised at all, folks. e.l.f. will probably be a big mover. And whenever I think about e.l.f., I also think about Honest. And Honest has been performing tremendous here recently, which a lot of people are kind of like, is this for real? Like, what's going on here? 57% in the past month is, it's a pretty large number, just on a 1 month basis, right? And so in regards to Honest, we'll see, how this performance keeps shaping up. But I will say, Carla's got the ship pointing in the right direction. That was the biggest thing. Like, this quarter, they just reported last month, or was that this month, technically? Carla, based upon not only the numbers, but the commentary, she's got the ship pointing in the right direction. And that's a big thing for Honest overall. Get that ship pointing in the right direction, and then if she lands this ship, to the right port, then we're really freaking talking, okay? And then next thing you know, it'll be a $5, $10 stock again. But, got the chip in the right direction. We still got to get to landfall here. And I think some people are probably positioning into a stock like Honest a little bit ahead of time, figuring we're going to landfall. And, that's probably what's going on there overall. But do keep in mind, a lot of these smalls have been moving pretty good. Fubo's another good example of that. Fubo's up 91% in the past 6 months, which is another pretty insane move in just a 6-month basis. So some of these smalls have started to move, and I think it's because also some people are believing that the worst is. I think a lot of people are convinced the Fed's done, and that obviously bodes pretty well for a lot of these small cap companies overall, because one of the big fears is the Fed's just going to go higher and higher and higher and higher in regards to that, right? All right, so next up here, let's talk about 2 stocks I'm digging into. I'm doing a lot of research on right now, and I'm strongly considering if I'm going to buy these stocks, in the next few months, essentially, okay? First stock I'm doing a lot of digging into right now is Zoom stock, ticker symbol ZM on this one. So Zoom, doing a lot of work on Zoom. And, obviously we all know Zoom from Rona, right? What NVIDIA has meant to the stock market in 2023, Zoom meant that to the stock market in 2020. Zoom in 2020 was NVIDIA of 2023. Thinking about it now, going back and just thinking about it, that's the truth in regards to that, right? Then there was a come down. The come down started for Zoom, obviously in 2021. It led more into 2022 and then this year as well, right? Zoom has seemed like a company kind of in a bottoming out phase as far as the stock price goes and all that good stuff. And they've still reported really impressive numbers, and their bottom lines come around tremendously. Whereas this used to just be a crazy growth number story, 3 years ago. Now it's about look at the bottom line, look at the bottom line, look at the profitability. So I've done a lot of work in regards to Zoom, and most of the most important things I look for in a company, Zoom has it. Cheap valuation. Look at the forward P, cheap. Valuation's there, check. Income statement, grade A income statement. Look at their last quarter, grade A income statement, check. Grade A balance sheet, check. CEO who's done a phenomenal job leading this company from a nothing to what it is today, check. Those are some of the most important things I look at in a company, but one of the last things is a moat. And when I think about a moat in regards to business, it's not just being you can keep your current customers, right? But also, can you continue to attract new customers? And so this is the stage I'm trying to figure out in regards to Zoom right now. And I'm doing a lot of work just trying to figure out, can they keep their current customers and keep attracting customers? Because that's a big thing I'm doing work on right now and trying to figure that out. If you're in the private stock group and you have a strong opinion on Zoom, join us in Stock Chat. A lot of people have been, we've just been talking about the stock and just trying to talk about it from different angles and get real world, use cases and things like that. So if you have a strong opinion on Zoom, you're in the private stock group, share your opinion in Stock Chat. I'm loving to just hear people's opinions kind of on the product use case, because that's what I'm trying to figure out right now. And is there a moat there? Is there not a moat there? The conclusion we've come to so far is obviously Microsoft Teams is the biggest competitive threat to Zoom overall. Microsoft Teams, absolutely, right? And it's not that's a new competitive threat, that's been there, but it's going to continue to be there. And we're just trying to figure out, is Microsoft Teams going to steal Zoom's customers in the future or not? Something else I thought was fascinating is I noticed Zoom's selling their kind of more phone-related service pretty heavy now. Simultaneously, Microsoft is as well. I looked at the Teams page, and right on the front page, they're talking about, now starting at $8 per month. And you get to, through this, you get to chat, you get to send video files, file sharing, plus do calling, all for $8 a month. And you know what I was thinking? I was also looking at what Zoom's doing there, what Microsoft's doing there. And I was wondering, over the next 5 years, is this any sort of competitive threat to disrupt companies like Verizon, AT&T, T-Mobile? I was actually considering that, right? Is this going to something that disrupts those type of companies short term? No. But if Microsoft wants to keep pushing phone and keep expanding what they can do there, right? And maybe even giving a internet feature somehow through some other service or partnering with somebody. And then what if Zoom wants to do it as well? I was actually considering I wonder if those could be any sort of competitive threats to those sorts of companies over time. I don't know. That's just something to kind of keep an eye on. That's just something in the distance that I thought was interesting. So anyways, Zoom, more work to do. The second stock is what I call a blast from the past stock, because this is a stock I previously owned years ago. And I haven't owned the stock for, gosh, probably, I don't know, 5 years or so. It's been it's so long. But I'm looking at the stock and I'm like, I like the setup of the stock in quite a tremendous way, okay? And that stock is Alibaba. Alibaba. This has been a huge money suck stock for people basically since its IPO, okay? There's a few times you could have traded it really good if you got in and out at the right times, but ultimately Alibaba's just been a money suck for people basically since the company went IPO, right? And almost everybody that's ever bought Alibaba stock is down on that stock, right? It's done horrible, not because the business has done horrible. The business has done tremendous, but it went IPO at what a lot of people consider a pretty high valuation. That created a money suck situation. On top of that, U.S.-China relations have been horrible the past several years, so no one's wanted to own Chinese stocks, right? And this is what I called out, 4 or 5 years ago when I dumped out of Alibaba. I said, these are unownable stocks, all the Chinese stocks, right? Here's something recently I do feel like there's a change, right? I do feel like China and U.S. sentiment has improved dramatically. The fact that Xi came to the United States for the first time in years, I can tell you, means that China's serious about making good, close friends again with the United States. It shows me that China needs the United States. The fact that Xi flew to the United States, huge, and was here for several days talking with business leaders, talking with politicians, everything like that. I'm telling you, that's the biggest thing that you could have ever seen. It gets no bigger than that. That is the Super Bowl. Crazy, okay? Also, Chinese economy hasn't been in the best place. I mean, they went through like 3 years of shutdowns. It's been kind of weaker environment. They have more competition on the global front from the manufacturing front. I do think there's a potential Chinese economy could start to recover a little bit heavier in 2024 and 2025. That would bode well for Chinese stocks as well, including somebody like an Alibaba that's really the face of Chinese stocks. So when I look at this, and the valuation's on the floor for the stock. It's a joke, right? I mean, under 8 times next year's numbers, and this is a growth company. Like, that's silly. But that's where these companies are at right now. And so I'm just doing more work there. I'm trying to figure out, do I think China-U.S. sentiment can continue to improve from here? I mean, it reached an all-time low just a few months ago, and now we're getting back in the right direction. How do I feel about the Chinese economy? How do I feel about Alibaba in general? They've had some big management changes this year specifically over the past 5-6 months. So I'm just kind of redigging into everything I already know about. I already know about all their business lines and things like that. Looking at the growth rates. Obviously, the growth rates of the business lines are very different than when I used to be in the stock years ago. But, it's kind of like getting back with the next. You kind of got to pick up and see, I know a lot about you, but we got to pick up on what's happened over the last bit of time here. That's the situation in regards to Alibaba, okay? Yeah, I'm trying to figure out, what's going on here. So, strongly considering the stock. I could make a move on it. I got more work to do, okay? Appreciate everybody joining me as always. Thanks so much for being here, folks. If you're looking to apply, join my private group, my private stock group and wealth group, then check out the pinned comment down there. You can fill out an application. We see if we can get you in there this upcoming week. Much love and have a great day.